Good evening and welcome back to Be Rich. Today I wanted to talk about a particular ratio where a lot of people are interested and a lot of people have asked me. We should buy high dividend paying stocks and dividend payout is a very important factor. And they think that they will get the cake and eat it too. That is, the stock value will also appreciate and the dividends will keep flowing in. One has to be excessively cautious of companies paying very high dividends. And when dividend payout ratio is extremely high, one has to be very careful. And this does not do good to the price of the stock. The price of the stock also corrects. More than dividend payout ratio, you should watch the dividend yield also. If the yield of a dividend is very high and the company is not retaining profits at the level of the balance sheet, it means the company does not have any place to invest or there is trouble. Traditionally, government stocks have very high dividend yields. This is because governments are hungry for cash and therefore any profit that is available is gobbled up by the government and nothing is left out for the reinvesting in the business. And most of us retail investors do not understand the significance of reinvestments. For the record, let me say here that Warren Buffett never pays dividend. He believes he can allocate capital better than you. And therefore, you get only one thing, that is appreciation of capital. So you can sell his stock and make the money, but he is not going to give you dividend. So if you are looking for regular income, one should look at by investing in bonds and not in yielding stocks. Today we are going to pick up a topic and discuss and strip that company bare and show you why you should not be looking at dividend yields. The company we want to discuss today is Vedanta. Vedanta has been in a shopping spree and has bought a lot of companies in India, starting with Kane, Sesagova, Electro Steel, and it bought Balco, Bharat Aluminium Company. It bought Hindustan Zinc, all at various stages over the last 20 years. It also tried to buy copper mines outside India and set up a copper smelter in Tuticorin. The copper smelter over a period of time was shut down because of environmental conditions. Along the way, they set up a lot of power plants and have starlight power. All this was done by binging on debt, and that is where the problem is. But I will leave Shashwat to explain to you why Vedanta has given dividend. The news headline comes out that Vedanta has given 1 lakh crore dividend, which means the promoter controls nearly 70% or 75% of the stock, between 70 and 75%. That means he has taken out 70,000 crores, while the rest of us have taken 30,000 crores. And in spite of that, in the last 10 years, Vedanta stock has gone nowhere. And if I comment on government companies, I am accused of being biased, though I am not. Even if we are in power tomorrow, we will do the same thing. But let's look at Vedanta and understand why you should not yield and invest in high dividend yielding stocks. Shashwat, you take over.
Yeah. So Vedanta is a company which has been boasting very high dividend yields for a long time now. And it's a company which is seen as a private entity which people are able to invest in apart from just the government stocks, which are usually high yielding, or other SIC companies. So before I get into Vedanta, one thing people have to understand about dividend payout is that it's not magic. That is, they don't pull this number out of somewhere and then pay it off to you. It comes from somewhere. The company has to earn, and it earns a certain amount of money. It makes a certain amount of sales, and based on the sales, they have a cost which they pay out, on top of which they have to pay interest expenses, and then they have to pay taxes. After all of these processes are done and they reinvest what they need for their capital expenditure, what you're left with is called free cash flow or retained earnings. What they do with this earnings is whether to retain it, whether to invest more than what is necessary to retain their current business, or to give you the money back as dividend yields. And the reason why companies give out payout dividends can be many. One, the promoter wants to take back some money from the venture. Two, you want to boost your company's stock price because you want to raise more funds by issuing new stocks. And there are many other reasons company might want to promote their stock price through paying out a high or fat dividend. But all things said, when a company decides to pay out dividends, they end up taking away money from their ability to invest it back into the company. And suppose a company has a profit margin of 25%, then the company is basically saying, okay, Vedanta does have an operating profit margin of 25%. So they're basically saying that this money is better used in the hands of the retail investor or the promoter rather than them putting it back into the business, because they think that opportunities of more than 25% can be found elsewhere. This is opportunity cost in economics. So Warren Buffett, on the other hand, thinks that he is able to generate more returns than what shareholders will be able to generate through the investment vehicle of Berkshire Hathaway. So, given this idea, Vedanta's dividend payout ratio, which is the amount of earnings which is paid out as dividend, is over 200%, which is almost two times their earnings which they're paying out as dividends. First of all, where's this money coming from is the big question. Because you can't generate money out of thin air. If dividends have to be paid out to stockholders, it has to be paid out from somewhere. The money is either raised through issuing new stocks, through borrowing, or through earnings. And now we know that Vedanta's earnings have not been as strong as they were in the past years. And we also know that Vedanta has been borrowing quite heavily to acquire new companies. Three, we know that Vedanta has not issued a huge amount of stocks to get the kind of money they're paying out in terms of their dividend. So we can narrow down where their money is coming from to pay out these dividends, and that's their borrowings. And if you look at their cash flow statement, which is very interesting, you'll end up seeing that Vedanta has borrowed over 30,000 crores and have also paid out to their borrowings of over 30,000 crores. So this seems to be like a loop where they're borrowing to pay their borrowings. And some of the borrowed amount is being paid out in terms of dividends. And this kind of I don't know what to call it, but arithmetic can be found in the cash flow statement of a company, which is why you need to look at all three, which is the income statement, balance sheet, and the cash flow statement. And if you actually look at Vedanta's dividend payout over the past 10 years, and you look at the current debt or the borrowings, long term borrowings, which they have in their balance sheet, you'll see that they need not have put themselves in the position they have if they, instead of paying out dividends, they ended up retaining earnings and investing it back into the business. What do you think about this?
Okay, but the question is, why is he paying dividends? He is paying dividends because Vedanta is owned at the promoter company called Vedanta in Britain. Vedanta Britain has a huge loan, and Vedanta's all operating businesses are in India. To service that debt, he needs capital. And over this debt has grown over the last several years. As the rupee depreciates, the capital and interest payments required to service that have also gone up.
Yes.
So he is taking money, he is borrowing in India, taking money out of India and paying it abroad and still not being able to do. Buffett famously once said that if you buy things that you don't need, soon you'll be forced to sell things you need.
The case with Hindustan Zinc.
Yeah, the case is now he's now offered Sashagova and Electro Steel for sales. The fact that his Tuticorin plant is shut down for environmental concerns is all putting so much pressure that he has to sell his core assets like Sasagova to repay debt. And if he is not able to do it, this debt will only climbing. And most of the promoter stake is also pledged at very high interest rates to his competitors. So it is quite possible that if he does not pull out the magic out of his hat, that I don't know, Anil Agarwal may lose control of his company. It only depends on how long interest rates remain high. And because interest rate is very high, there has been enormous pressure on metal prices. And even copper is down, but he doesn't have much copper now here in India. He doesn't have copper smelting. And you have iron and steel prices under pressure because China and Vietnam are dumping steel. So there is a lot of problem at Vedanta. So when a company is paying a high dividend yield or a very high dividend ratio, you better take a look at it. The exception being the case of IT companies. IT companies in India are not investing in product development. They are basically doing labor arbitrage. And therefore, whatever profits they can pay out 75 to 80% of their earnings as dividend. That is why Infosys and Tata Consulting have great dividends. Infosys is really rewarding the shareholders. In case of Tata Consultancy, what is happening is the Tata Group had a lot of debt issues. So, and they had other investments to make. They were milking ITCS. They are still milking TCS, taking it back as share buybacks and dividends. And that money goes back into Tata and Sons and is reinvested in other companies. It is only in recent times that Tata Motors is out of the woods. Tata Steel is still struggling, but you have Tata Consumer and Tata Motors contributing to the pie. But even today, nearly more than 50% of the profits earned by the group come from TCS, and that is why TCS dividends is very high. But the point noted is TCS does not have debt, and
It's spewing free cash flow
it's spewing free cash flow, and they
because
don't have
capex.
there is no capex,
Yeah.
there is no product development. They are able to milk it, whereas Vedanta has everything, and therefore Vedanta is struggling. There you can see the difference in price earnings ratio of TCS and Vedanta. You will understand this.
But there's also a caveat, which is that in companies abroad, sometimes you end up seeing good deals, like Unilever, which in the UK is paying quite a good dividend yield for the kind of company that it is.
That is because the company again does not require to invest.
Yeah.
They
Even
are not in
ITC paid out a good dividend yield.
ITC, when the price was very low, we had a good dividend yield.
Yes.
Now from 10%, it has come down to 4%.
Yeah.
That is because the stock was undervalued.
Yes.
And ITC doesn't need big investments to create products.
It has a moat.
It has a moat.
Yeah.
Unilever has become an old company, not generating new products, and therefore is paying out most of its profits and doesn't require capex. But in a metal refining company, requires a lot of capex.
Yeah.
So kindly take a look at this. So just next time, before you jump, because the dividend yield is very high, you have to look where is the money coming from.
And the company structure is the big chunk of this equation of figuring out whether the company needs the money or not.
Thank you for watching Be Rich. Vinod is still away, and so me and Sashwath are doing the program. If you like the video, kindly subscribe to our channel and turn on the bell notification. And if you like this video, send this to your friends and relatives and have them take a look. Thank you for supporting Be Rich.
Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.